Hello guys and welcome back to the channel. And in today's video, I specifically wanted to analyze an asset in my long-term portfolio that is currently showing losses. And of the various cryptocurrencies I hold, there are presently only a few problematic ones experiencing declines. The first project is Vega Protocol and the second is Fire. So we already have a decent understanding of what to do regarding Vega Protocol after watching this video. It will appear somewhere here. Definitely take a look, guys, if you're interested. But now I want us to comprehend what is occurring with Fire and evaluate its future potential. So in this video, we will examine the pros and cons of this startup and assess its prospects to decide for ourselves what action to take next, whether to dollar cost average or divest this asset. And without further ado, guys, as usually, hit a like, subscribe to the channel, and let's get started. Alright, my friends, so let's begin by following our tradition and briefly discuss what this startup does before we review the key metrics. So Fire basically is a leading blockchain platform aiming to enable smart contracts compatible with the Ethereum ecosystem. This project aspires to become a major player in the L1 space, competing with such platforms as Aptos, Sui, and Avalanche. And what distinguishes Fire from other contenders, according to the developers, is a commitment to United Nations sustainability principles concerning resource use. In other words, their vision is to build the world's foremost blockchain for developing business applications faster, more efficiently, and more affordably while adhering to responsible environmental policies. Of course, this concept of an ecologically conscious yet high-performance blockchain network remains unproven. However, if we take a historical perspective, it is quite common for initiatives in 2019 and 2021 to take on similar ambitions. Frequently, they have sought to construct a global economic order and establish world peace, improve business processes, and so on. Often, though, such efforts simply fade from view because no sharp objective or evident market need stands out. And with this precedent in mind, we should recognize that Fire represents a fledgling startup in the cryptosphere. While its current objectives and direction remain misty, it may pivot over time to refine its value proposition and carve out relevance. Ultimately, whether Fire gains meaningful traction awaits the judgment of time. And looking at the company holistically, it appears to be predominantly made up of Arab, Israelis, and Indians. So this brings up questions regarding the expertise level of the staff, especially in the technical areas like cryptocurrency and blockchain. For example, the founder, Pratik Gauri, seems to be a business coach rather than a technical specialist with experience launching crypto startups. So his LinkedIn profile, as you can see, showcases various business training programs and speaking engagements he has conducted. So this background contrasts with the image one would expect for someone leading a cryptocurrency venture. Moreover, Pratik created a personal website at pratikgauri.in that highlights his accomplishments and credentials as a business coach and public speaker. It includes photos of him with famous individuals, positioning himself as a successful guru. And in summary, Pratik's credentials suggest expertise in business coaching rather than cryptocurrency or technology. So in my opinion, this appears incongruous with the project he aims to promote in the crypto space. So the mismatch raises doubts regarding the technical capabilities of the team as a whole, in my opinion. But if we look at the Fire's team as a whole, as I said, including the co-founders and other employees, the situation seems normal. The co-founder Pratik Dwivedi has experience in tech product development and have worked in Silicon Valley. You can go through his LinkedIn profile and analyze it deeper. I will not stay too long here. And as for the rest of the staff, there are around 30 people in total, comprising designers, marketeers, developers, and more. So far, so good. However, there are still some concerns, and at this stage, there is no way to assess the work and effectiveness of the team. And according to the reports from Electric Capital on developer activity, Fire doesn't appear at all. So this could simply mean that they are small, but it may point to an issue as well. So troublingly, there is no public information on their GitHub about their development progress, since their repositories are private and we can't see if any coding work is happening. Nonetheless, it's worth noting that Fire is working towards a full launch of its network in June this year. and perhaps development details are being kept private in preparation for the mainnet rollout in a few months. So while there are some deficiencies, the overall trajectory seems positive. The team and composition looks decent, even if visibility into their technical progress is lacking at this point. By the way, guys, a short advertisement, please do not skip. Maybe you'll find it useful. I'm personally using Tangem Wallet for holding any crypto in general. It is a self-custodial hardware wallet that gives you absolute control of your private keys. It has been audited by Kudelski Security, an independent Swiss audit company. The chip has the highest certification level EAL 6+, which guarantees the high level of security of your assets. You can find the report on the official Tangem's website. Everything is transparent. And unlike other wallets, Tangem comes with 3 cards, and what I personally like is that it is shaped like a card. Looks like a traditional bank credit card, and it can fit anywhere, can be taken anywhere, and these cards are used for generating and storing your private keys instead of a recovery seed phrase. The wallet supports over 6,000 different crypto assets across 37 networks. You can also access decentralized applications, and through the secure Wallet Connect protocol, the mobile app also allows you to trade on exchanges, buy NFTs, and stake your assets. It is absolutely easy to set up and easy to use. And for the pack of 3 Tangem cards, 1 wallet. I really do recommend you to have 3 because it has a higher level of security. It will cost you around $70. This makes it one of the most affordable hardware wallets when compared to options like Trezor models, for example, Ledger or others. And if you use promo code ALL4MEN, you will get additional 10% discount. So please go ahead and explore the website for yourselves. If you're looking for a good quality wallet to store your crypto, I do suggest Tangem. The link you can find in the description. Thank you for watching, and let's continue. And now I would like to mention that this project has generated substantial hype and interest over the past year. A year ago, there were rumors that more than 100 millions were invested into this project at an early stage, demonstrating encouraging optimism for its potential future success. And regarding Twitter, the official account for the project currently has around more than 480,000 followers with strong engagement through partnerships and collaborations with other initiatives. More recently, about a week ago, or maybe somewhere on March 11th, I think, it was announced that renowned market maker Gotbit, who often boosts new tokens, partnered with this project and contributed $10 million. And unsurprisingly, given this news, the coin's price immediately rose by 50% in February 25th. And this growth makes sense considering the project's current low market cap of only $7 million, even less at the moment. But the upcoming release of the mainnet in June is the most significant event on the Fire's project's roadmap. And according to the roadmap, June will mark a major milestone in the project's development. In recent news, Fire announced a $10 million grant program to support developers building applications on Fire ecosystem, and this suggests that Fire team is laying the groundwork for expanded growth, with the most interesting developments likely happening after the mainnet launch in June. Additionally, Fire was recently named as a new Unicorn of the Year in recognition of its potential. The full article states that this award is given to startups that have reached unicorn status, meaning they're valued at over $1 billion. However, I don't really understand where they got these valuations from. And looking at the market capitalization, as I mentioned before, the current value is at $8 million. And if we consider the total valuation based on the entire coin supply, it would be around $270 million. So it is still unclear for me where the 1 billion figure comes from. So in overall, Fire seems to be gaining momentum and recognition as it prepares for the highly anticipated mainnet release in June, which may propel the project into its most dynamic growth phase yet. So the grant program also shows the team's commitment to building out the ecosystem of products and services that utilize the Fire network. Also, they recently introduced the staking page. If you hold this coin, you can go to the official website, connect your MetaMask or other wallets, doesn't really matter, and deposit your coins to earn 12 to 20% APY. There are different lockup terms. You can stake for 90 days, 30 days, or even for 1 year at 35% APY. So you can easily do this directly on their staking page. So the first part is over, guys, and currently, after reviewing the foundational concepts and favorable prospects for this project, we will focus on analyzing the financial viability to determine if we should invest in that project. So let's examine the details thoroughly. The data shows that this project ranks over 1700th place, indicating extreme lack of popularity among cryptocurrencies, with a small market capitalization of less than $8 million of dollars. And as a fairly recent addition in December 2023, the coin price dropped down more than 2 times from, say, 50 cents to 17 cents at the moment. And of the total token supply of 1.5 billion of tokens, only about 3% or around 50 million of them are circulating in the market. So this signals that trading volume is still low. Moreover, the downward price trend suggests significant buys have yet to occur. So now we can move on to analyzing the investors and funding that this project attracted early on. So, as I mentioned previously, about a year ago, there were news reports stating that over $100 million of dollars had been invested in this project. And when reviewing the list of investors, basically as a whole, there are no well-known names such as Electric Capital, Coinbase Ventures, or Andreessen Horowitz. Instead, the backers consist primarily of lesser-known Tier 3 and Tier 2 funds such as Moonrock Capital, X21 Digital, Magnus Capital, and etc. The reputation of these specific funds is not the greatest, likely because upon examining the portfolios of Moonrock Capital and X21 Digital, it seems they tend to invest in relatively unknown entities. And when looking at the list of projects they have funded, there are no major name brands. So this same theme applies to the other funds as their investment history as well. But in fact, the most hype was around SRAM and MRAM Group, who announced in July 2022 that over $100 million of dollars had been invested across multiple rounds. However, if we analyze the fund in further depth, it lacks any real basis and credibility in the cryptocurrency industry. The only projects they have invested in is the Fire project, indicating they have no other investments, just the B Flights and Zyber 365, but I haven't, to be honest, heard about them. So, understandably, funds without any reputation raise many questions. I also heard that numerous people legitimately believe that SRAM and MRAM Group is a sham entity, perhaps only existing to generate hype and interest from the crypto community through an internal agreement with the project's team and foundation. And this seems quite plausible, actually, in my opinion, since the story has received extensive media coverage and articles from various outlets implying it was likely just a marketing tactic. So now, guys, let's examine the prices at which the funds invested. So as you can see, there was several rounds like pre-seed, seed, Series A, Series B, etc. And in total, if we look at the average valuation, the funds were buying at around 5 to 6 cents approximately. And this is around 3 to 4x from the current market price. On one hand, this is good, since if we wanted to buy these coins now, we aren't too far off from what the funds paid. But on the other hand, at current prices, the funds might be cashing out as well. And if we review the schedule of token distributions on their official website, we can see that since the initial exchange listed on December 5th, there has been a gradual release of tokens from the private sale rounds and early investors. So this indicates that more tokens will likely enter the market over time, and which could put more downward pressure on the token price without significant new buyers. So in overall, guys, there are pros and cons in this project. So major weaknesses include the confusing terminology around the project's utility and the uncertainty around whether large investment funds actually contributed substantially in the token sales. And on the other hand, as a startup with a still low market capitalization, large investments now could potentially generate strong returns. So recent activity from funds like Gotbit suggests continued interest. And in summary, guys, based on the token release schedule and questions around bakers, the token price may continue decline to 10 cents or even lower without fresh capital entering. However, if major crypto funds buy in, the low market cap offers room for growth. It is prudent to consider that this project could be a scam devised by a group of these developers aiming to profit by creating their own questionable investment platform. They likely intend to fabricate a credible backstory, slowly selling their tokens to multiply their profits 2 or 3-fold from initial prices. And this is another plausible scenario, in my opinion, worth contemplating. And given all the information presented, I think you should carefully weigh up the pros and cons and decide for yourself how to proceed. If I was in your position, I might only invest a small percentage of capital to avoid missing out if there is a legitimacy to the project's growth claims. And as for myself, guys, having already bought in at around how many 24, maybe 25 cents, if prices fall below 15 cents, I will definitely DCA my position. And at that point, if it continues to underperform, my maximum loss would be around less than 1% of my total capital. Not a favored outcome, but one I could endure. So, in summary, guys, I have highlighted the key considerations, both positive and negative, related to this asset. And you must now determine your own risk tolerance and strategy. So that was it. And if you enjoyed the video, guys, leave a like and also leave some comments. Would be interesting to know what you think. Also, consider subscribing to my Telegram channel, as the information there is presented in a more actionable way. So see you in the next videos.